Most Australians think a bank is a bank. You open an account, you deposit your pay, you apply for a loan, and everyone gets the same deal. That is one of the biggest financial myths in this country. The truth is, banks have invisible lines drawn inside their systems. And every time your net worth crosses one of those lines, everything changes. The fees you pay, the interest rate you get, the person who picks up the phone, even how fast your loan gets approved. It all shifts based on a number most people never think about. Today, I'm going to walk you through the 3 net worth levels where Australian banks start treating you completely differently. And once you understand how this works, you'll see exactly why building wealth isn't just about the money itself. It's about the doors that money opens and the thousands of dollars you either save or lose depending on which side of the line you're standing on. Let's start at the level where most Australians actually sit right now. If your household net worth is under $250,000, which includes a huge chunk of renters, young professionals, and people still paying off debt, the bank sees you as a standard retail customer. You get the call center, you get the standard variable rate, you get the same brochure everyone else gets. If you walk into a branch and ask for a better deal on your home loan, the person at the desk has almost no authority to discount anything. They might shave off 5 or 10 basis points if you push hard enough. At this level, banks are making money off your fees and your inertia. They know most people don't shop around. They know most people don't even read their loan contracts, and that costs you real money. We're talking hundreds, sometimes thousands of dollars a year in fees, overpriced insurance bundled in, and a home loan rate that's 40 to 80 basis points above what someone at the next level is paying. And the thing that makes this sting even more is how close some people are to crossing out of this tier without realizing it. The median household net worth in Australia sits around $600,000 when you strip out the extremes. But a lot of that wealth is locked up in property and super. The liquid position, which is what your bank actually sees, is often much lower. So even people who technically have a decent net worth on paper get treated like entry-level customers because their bank only sees a transaction account with $4,000 in it and a credit card balance. Here's what shifts when your net worth pushes past the first line. That first line sits around $500,000 in net worth, or roughly $150,000 to $260,000 in annual income, or over $850,000 in total lending or investments with the bank. When you hit that zone, you get assigned a dedicated banker, someone who actually knows your name, your financial position, and your goals. You get priority service, which means shorter wait times and faster loan approvals. You start getting invitations to exclusive financial education events. And here's the part that actually hits your wallet. You get access to discounted home loan rates, fee waivers on everyday accounts, and better credit card offerings. On a $1 million mortgage, even a 30 basis point discount saves you $3,000 a year. Over a 25-year loan, that's $75,000. And here's what no one tells you. These tiers are flagged automatically inside the bank's CRM system. Your total balance, your income deposits, your lending, it all gets tracked. When you cross the threshold, the system flags your profile and routes you to a different team. But most people at this level have no idea they qualify. They never make the call. They never push for the upgrade. And so they keep paying full price while the person next to them with a similar income is getting the VIP treatment. There's also a tactical angle here that most people miss. You can sometimes trigger the upgrade by consolidating. Move your savings, your home loan, and your everyday banking to one institution. When the bank system sees the combined relationship value, it tips you over the line. You haven't earned a single extra dollar, but you've changed how the bank categorizes you. And that recategorization alone starts saving you money immediately. Now let's talk about the next level. When your net worth hits $2,500,000 or more in investable assets, or your household income is above $400,000 to $500,000, you enter private banking. At this level, you're not walking into a branch anymore. You're sitting in a private office with a senior relationship manager. You get tailored lending structures, access to institutional investment opportunities, estate planning support, international banking services, and your own direct line to a team that picks up on the first ring. But here's where it gets interesting. Private banking is not automatically a better deal. In fact, there's a trap inside it. Because when a private bank gives you the white glove treatment, they also charge you for it. Research from Australian mortgage brokers shows that private banking clients often pay 20 to 55 basis points more on their home loans than what they could get through a good mortgage broker. The banks justify it with the personal service, the convenience of having everything in one place, and the prestige. There's another risk people at this level don't think about until it's too late. When you consolidate everything, your home, your business loans, your investments, your insurance, all under one private bank, that bank has complete control over your financial life. If your business hits a rough patch and the bank decides to reassess your commercial lending exposure, they can force a repayment within 30 days. And if your home is cross-secured against that commercial debt, your home is at risk too. The real advantage of private banking isn't the home loan rate, it's the access. At this level, banks start offering you opportunities that simply aren't available to retail customers. Pre-IPO investment allocations, complex lending structures for commercial property, lines of credit against your share portfolio, tax-efficient strategies built around trusts and SMSFs. And there's a level above even that. Once your investable assets pass $10 million, you move into ultra-high net worth territory. CBA serves this segment through a dedicated ultra-high net worth team within Commonwealth Private. Goldman Sachs recently expanded into Australia, specifically targeting families with $100 million or more. HSBC Private Banking entered the Australian market aiming at clients with over $10 million in bankable assets. At this level, you're not a client, you're a relationship. The bank assigns a team. You get access to family office-style services, multi-generational wealth planning, philanthropy advisory, and bespoke investment mandates. So what does all of this mean for you if you're watching this right now and you're not anywhere close to $2,500,000? It means the game is rigged in favor of people who understand the system, and now you understand it. The first move is simple. Check your total position with your bank. Add up your deposits, super, lending, and investments held with them. If you're anywhere near the Premier threshold, call the bank and ask to speak with their Premier or Priority team. Tell them you want to review your total relationship. That single phone call could save you thousands. The second move is to never let loyalty cost you money. Australian banks charge what they call a loyalty tax. Long-term customers consistently pay higher rates than new ones. In 2025, research showed that renegotiating your home loan could save a six-figure sum over 25 years, even without switching banks. And here's a tip that actually works. Don't call the general customer service line. Ask specifically for the retention team. That team has deeper discount authority than the person answering the main line. They're trained to keep you from leaving, which means they have room to move on your rate in ways the standard team simply cannot. And the third move is to think long-term. Every dollar you add to your net worth doesn't just sit there. It actively changes the way institutions treat you. Better rates, better access, better advice. Your net worth is a key that opens different doors at different levels. And now you know exactly where those doors are. If you found value in this, subscribe to the channel and turn on notifications. Thanks for watching, and I'll see you in the next one.